What's up? I'm Sick, and we're going to talk about how the market looks toppy, some opportunities I'm seeing, some different trades. I think they're really good right now. But before we do that, let me cook a little bit on a rant here, okay? We got Michael Gade here, CFA. He said, if you anticipate a market correction by shorting, using puts, or going cash, you lose. If you anticipate a market correction by being long defensive sectors, treasuries, the dollar, or gold, you have a chance at making money if a correction doesn't happen. Few understand this. By the way, few is like his coined word. It's his branding. I love that. Every time I read that, I'm like, I need some sort of hashtag or something. But let's think about this for a second. These institutional guys will always tell you that because you keeping funds with them, you keeping funds in the market is literally how they make money. They don't want you to pull some money out and buy some puts or time the market. And for a lot of people, especially retail people who don't really keep track of the market, buying puts and trying to time crashes is not going to, go well for them, right? Does that mean that it's never a good idea to buy puts if you think the market's going to turn over? Obviously not. And the most obnoxious thing is a lot of these guys, some of them I know, will say stuff like this on the social medias and then quite literally, I'm not going to say names, but quite literally be in my DMs. Oh, I just bought puts on this, building up some cash. This is totally about to plummet. They'll tell you that you should just wait it out. Don't time the markets. They're all timing the markets with their own money. When it comes to their own money, they'll be nimble. But they tell you, don't worry about it. Just leave your funds with me. It'll be fine. And honestly, if you're an investor, should you even care about market crashes? No, it literally doesn't matter. V-shaped recoveries are a mechanical thing that will occur. Different products like 401ks have 60% in stocks, 40% in bonds. This is one of the packages they have, right? There's lots of different ones, but it's all the same mechanic that plays out. When the market crashes, that 60% stock allocation goes down to like 40% or 30%. But the bonds then go up, right? Even though more money isn't put in them, it's just proportional, right? So what do they automatically do? They automatically sell some of the bonds, put the money back in the stocks. And when it does that, it automatically buys the crash that occurs in the market. And everyone knows this, and they all race to beat these products to buy the dips, okay? If you're just a long-term investor, just holding, you should not be worried about crashes, okay? You should have this in your head and just know it's fine. Does that mean you still can't take a small portion of money and try to time a crash, trying to get a payday? Is it going, if you take less than 1% of your account and try to turn $1,000 into $10,000, $15,000, is that going to be the end of the world? No, absolutely not. It is ridiculous to act like that you can never speculate, especially if you're young on the younger side, or if you're using an appropriate amount of funds to do things like that. To act like it's always a bad idea trying to anticipate, it's stupid, especially since none of these guys follow that. Some of them might, but very few actually follow that. They all try to time stuff on their own accounts. They're all nimble in their own accounts. They're constantly moving funds around and trying to time things. And then they'll just tell the average person, oh, don't worry about it, because they want you to buy their fund. That's why they say that. That's why everyone says this stuff, even though it's not what they do. It's all just sales tactics. And my sales tactic is to tell you how the game actually works so that you'll watch my YouTube videos and I can collect some ad revenue. That's what you call a mutually beneficial relationship. My best interest is also yours. So last week we covered this charting. I'm pretty sure we covered this charting. Don't put a lot of emphasis on the timeline here. Okay, I think this could play out by the end of February, maybe early March. But we're looking for the turnover. Thursday, I was using the opportunity to buy more February puts. I think I need to roll up my strike, especially if this wants to cook a little bit higher. As you can see, we haven't hit a perfect top, but I did go ahead and average in because I think we're getting really close to the top. I'm not trying to time this perfectly right. I'm just looking for the larger move to the downside. I'm treating this a lot like I did with TLT. Hopefully I don't paper hand it and leave a lot of gains on the table. But remember, this was still really profitable trade. I'm thinking this is going to play out very similarly, where I'm just going to slowly build into this positioning, looking for this ABC to the downside. It could take until January to actually play out, be respectful of the seasonality. I think this is getting a little repetitive week over week, but I think it's a good to have the consistent reminders because I think eventually people will try to race each other to this capitulation. I think it's a pretty obvious to most people who are looking at the market right now. This is very likely what we're going to see play out. Another stock that has already become really profitable actually is Coin, and I'm playing this a bit more aggressively than I am with SPY. We did have our charting out on Bitcoin. It ended up going a little bit higher, 2,000 higher. When the stock's $42,000 and you're $2,000 off, is it really like the end of the world? No, not really. But we saw it cook a little bit higher than I had anticipated, but I'm seeing this roll over. It's looking very bearish on the daily chart as well. I think that we're looking for the pullback here. I have it pullback going to 37,000. I did also sell a portion of my Bitcoin as well around the 42, so I'm looking to buy back into the dip, trading a portion of my Bitcoin. I don't have the confidence, and I don't think you really should. If you have long-term faith in Bitcoin, I don't think you should be trying to trade with your full account of Bitcoin. I just don't think that's ever that wise. Passive investing works, be proportional with the amount that you actually want to trade with versus what you're investing with. Make sure, if you can't keep that separate in your head, keep two separate accounts. All solid practices, but that's what I'm looking for here. And so I kind of want to play Coin aggressively because I'm also looking at how volatile the stock is. And we can get some big moves. I had this potentially going all the way back to $80. Will that play out? We'll see how it actually goes. As I said last week, I think as more of the spot ETF products hit the market, that it'll cause some diversification within the space, and money will leave Coinbase. Now let's talk about Tesla. This is looking extremely bullish. We broke out of this pretty large wedge that we're seeing on the daily chart, and it looks like it's just starting to fire to the upside, quite honestly. So this is starting to look very appealing. Another stock that's looking really appealing is not AMD. It's actually, I thought I already had this pulled up, but Amazon is also looking pretty appealing as well. We can see we're just now breaking to the upside. I want to see if this decides to turn over and to create a bottom here, but I'm seeing the RSI cross the SMA, and I'm thinking that we could see some short-term opportunities appear for Amazon, which is kind of contrary to what we're saying for the SPY, but quite honestly, I think after we had the rebalancing rather of the indexes, I think that we could see this cook higher and not really give a big effect to SPY. So I'm kind of looking at Amazon as maybe some of the tailwinds of the seasonality building here that I could potentially play for some short-term trades on the upcoming weeks, or the tail end of December. I think it's a better way to say that. Another trade that I think is really interesting is OGN. I've already taken a position here as well. Already had some good profits here. Looking for potentially 100% upside on shares for this stock. This is a profitable drug company that has been really beaten down by the market. Just from, you can see how crazy oversold we were here, and then we've seen this long period of consolidation. Then your TTM breaks on the daily as well. Fundamentally, this company's total sales are larger than their market cap, so I think it's just straight up a good deal. I don't really even have a catalyst for this week, just to see the weekly rolling over as well. I think this is just a straight up heavily undervalued company. So I think we have a big opportunity here. 100% I think is conservative. Honestly, this stock could, if we also get some good news and some good earnings reports that come out, this stock could go to $30, maybe 36, maybe 300% on stocks, on shares. So I am a buyer there as well. And that's going to be it for the weekly report. I'll see you on the live stream or in the Discord. $2.99 to be a Discord member. Less than a Starbucks coffee. If you spent $2.99 and it wasn't even worth it, would you even be mad? Would you though? So go check it out.